investors. So we are back with our new member of the month. We have David Turner and his partner Matt. They are with Ownwell Property Protesting. So I'm super excited to get into this today. Our goal here is to connect our network with our network. We want to give you guys as many people and resources as possible to grow your business, to grow your portfolio, and do so efficiently. And I think this is a huge area for so many investors, and I'm excited to get into it. My name is Erica Neal. I'm your host, your infinite banking practitioner, real estate investor, and I'm here again with David and Matt from Ownwell Properties. Guys, thank you so much for being on today. How are you doing?
Yeah, thank you for having us.
Doing great, Erica. Thanks so much for having us on the show.
Man, like I said, I'll tell you, I mean, people that know me know I'm active on one deal. We're actually moving out of that deal, and I'm passive in multiple deals. All of my deals are particularly in Texas currently. And I think the number one issue every single property that I'm having with great operators, right? They're doing a great job, but one of the number one issues they're running into is property taxes. So I'm not just excited about this for, all my friends and clients. I'm excited about this for me. And, this will be a good one. So for people who don't know, property tax protest, can you guys give us a high level overview of what you guys do? What is property tax protest? Like what value are you guys bringing to the marketplace?
Yeah, absolutely. Thank you, Erica. So yeah, Ownwell, we take a little bit of a different approach from legacy tax firms. We are more of a technology forward firm. So we pull from over 100 different public and private data sources, and all that data is fed real time into our tax consulting experts. Those guys and women are local in market, so they've got that local market knowledge and expertise. Some of our tax consultants actually worked for or were hired from the county appraiser district directly, or
Hey.
have 10, 15 years experience working for other firms in the industry in Texas. So yeah, our different approach and our expertise allows us to get higher and better results for our clients. And in turn, that's gonna help boost their property NOI and can flow into other parts of their business.
Absolutely. So you guys are taking that stress, all the time, effort, and energy, because there's a lot that goes into protesting your property taxes, especially on a commercial scale. You guys are taking that load off of the operators, off of these GPs. And not only are you taking that load off, you're probably going to do a little bit better job, if we're honest, right, than somebody trying to do it on their own.
Yeah, absolutely. It's a full white glove service that we provide. So once the customer signs up, they've got access to a client dashboard that can track everything in real time, progress on the portal, easy to upload additional information. We've got customer support and the full gambit for servicing the clients all the way through to the end of the appeal.
Good stuff. Yeah, I think that, like you said, on that tech side, I think that's huge. So I know you guys are probably in this field quite a bit, so you're aware there are multiple companies that are out there doing property tax protests. Obviously, that's a big deal, especially in the real estate space. So Matt, I'll pass this one to you. Why Ownwell? What is it? What is it about you guys that sets you apart from all the other options that people have in this space?
Yeah, thanks, Erica. So, there are a number of reasons, right? I've been with the company now a little over 6 months. Prior to that, I was at a big, one of the biggest property management software companies out there. And so for the last 5 years, I've been supporting multifamily and various real estate commercial real estate owners. Sorry about that. And when I met with Colton and the rest of the leadership team at Ownwell, there's this very raw, very analytical, very data-driven energy about the company. And they built Ownwell. Joseph, our CTO, has done an amazing job. They built Ownwell as a tech-first company
Mhm.
that services the property tax appeal space, right? Colton, our CEO, worked for a billionaire years ago and was like tasked with helping this billionaire not spend money on unnecessary things and unnecessary taxes, and saw how the wealthy have the ability to employ teams of attorneys and accountants to go represent their properties and save them money. And he wanted to really democratize that action and bring awareness to it. That said, right, property tax appeals has been around a long time, right? So there's some legacy outfits out there that are 25, 30 years old, if not longer. the reason for me why Ownwell is we're doing a combination of three things, right? We have the tech, right? We consolidate data from 150 different data sources and process that on literally a day-to-day basis so that we're presenting the latest and greatest evidence, whether your property is residential or commercial, it is the freshest evidence we can find. Two is people. We employ 70 in-house property tax consultants that
Mm,
sit in territory of the counties that they represent. That allows us to leverage their relationships with the county appraisal district and other key relationships in the legislature to help us, deliver the best possible outcome, right? And
that's
the
huge.
last thing is process, right? How do we take all of that and make it as seamless and hands-off a process as possible for our clients? We have some clients, especially on some of the larger institutional type clients, where they want to meet with us every week or every 2 weeks and kind of go over their portfolio. We have the ability to deliver that. There are some people that are like, send me, let me know what you think you can get my property down to, and then send me the bill, and we can accommodate that too. So the fact that we're so agile and nimble allows us to accommodate a number of different customer profiles. Lastly, and I think this is something we'll touch on here in a little bit, you know, I'm an investor myself, right? I
Mhm.
understand, and David is as well, right? We understand the impact and or consequences of certain financial outcomes, right? If you're an investor and you're invested in a five cap market, every $1 you save and $1 you earn is worth 20. If you're in a six cap market, it goes to 16, right? So why wouldn't you want to take the guidance of someone who is also on the front lines as an investor and trickle that capability, that knowledge, that domain knowledge down into the property tax realm? So for all those reasons, I say that's for, why Ownwell.
Absolutely. And I think that last one, I mean, all of those are super important, especially, in today's world as fast paced as we are. And we're seeing, you know, a lot of properties being squeezed. So every dollar in the NOI is going to matter. Cap rates obviously are going to impact that, but every dollar is going to go far. But I love what you said. And I think, David, before we started, you mentioned like you guys are for investors by investors.
Yeah,
And I live and breathe by that. That's something that I'm passionate about, even in my space, because I use this analogy all the time. Why go to a personal trainer that's not fit themselves? Right? Like, or as my grandma says, never trust a skinny cook, right? So you could go either way on that spectrum. But no, I think that's huge that you guys are in the trenches with people. So you get it. You've been there, done that, got the t-shirt as operate on the investing side, but also you have people that are in a house as consultants that already have these relationships with the tax appraisers and in that county, and they have that experience. So, I mean,
yeah.
that's huge. Awesome.
Yeah, absolutely. And like you said, the by investors for investors. So with that in mind, we, like Matt said, we understand the impact of property taxes. That's going to be your second largest expense behind debt service.
Yeah.
So huge impacts across the portfolio. And when we're working with larger clients, they've got investors to answer to, potentially publicly traded institutional clients that's going to have an impact on future opportunities as well and future investment portfolios from their clients. So yeah, we definitely understand how that goes.
Yeah.
Absolutely.
Yeah.
So let's
Last thing on that, and one thing on that, Erica,
yeah.
sorry. It's also, I don't think it's any secret that, the last 18 to 24 months have been kind of a challenge, especially with certain asset classes, multifamily, right? Taxes have gone up, insurance gone through the roof, occupancy levels have struggled, if not declined, with all this new supply coming on in the market, right? And probably more so right now than in a really long time. There's probably a lot of really storied assets out there, right?
Mm,
Where even with the best operators, it's hard to overcome that much change, right? You have rate caps expiring, the whole thing. Why not partner with a company that understands that, right? Like, how can we look at your financials and make those financials work for you in a way that we could potentially save you taxes after, maybe you had a tough year, and all that stuff plays into account. Honestly, I don't think a lot of people know that. Enough people know that where, we understand that story and the questions to ask to help you.
Absolutely. Like you said, that comes from your experience and, having that in there. So you know how to dive in and really peel back layers and areas that even, again, great operators are doing stuff. If you're a new operator, especially within the last couple of years, you really need some help, right? Like, let's be real. So having somebody with that experience is going to just help amplify and get you out on the other side
Hmm.
as best possible, right? Some areas are better than others, but yeah, absolutely. So I want to kind of pull back from Ownwell a little bit and focus on you guys. So we'll have like a Ownwell sandwich. So we'll start with Ownwell on the outside, put you in the middle. David, let's start with you. So tell us a little bit about your background, your experience in the real estate world, and, what drove you to where you are now.
Yeah, absolutely. I started my career out of school with about 12 years of IT sales, and from there pivoted into real estate and then further into commercial real estate. Started flipping houses back in 2018 when we first had kids. Realized how much I enjoyed that, but at the same time wasn't a huge fan of the emotional side of the residential market that it come as part of the business.
Yeah.
So I was really drawn to commercial investing and got started in multifamily investing, joined a mastermind group out of Florida, was a passive investor on a couple of deals, one in Houston actually. And then from there had the opportunity to participate as a co-GP on a few different deals, one in Corpus and one in Dallas that are going really well, that I'm happy with. So from there, just continued on that path. I actually have my license as a commercial real estate broker. So I was doing multifamily investment sales for a couple of years and really enjoyed that. The black and white and the analytical side of the business is what I really enjoyed, and helping clients find good deals and the negotiation, getting them across the line. And then was able to leverage the both of those sides of my background from technology sales and the knowledge of commercial real estate and bring that together to what I'm doing now with Ownwell.
Love it. And that's another level too, like outside of the investor operator, passive investor, co-GP, also on the commercial broker side, like you have an idea of what that looks like. What are
Mhm.
people looking for? Like what's important? How are you going to help right get that over the finish line from a point of sale perspective? So love that.
Yeah, yeah, absolutely.
And then Matt, what about you? What's your story? How did you get from A to B?
So I bought my first single family property back in 2016. I bought my second one 90 days after that. And then, I don't know, 6 months or so after that, bought my first multifamily here in Texas, with my buddy Mike, 8 unit, a few miles away from AT&T Stadium in Arlington.
Very nice.
And it was a huge lift. We certainly picked a gem, and I say that very sarcastically, to cut our teeth on. But man, I got the bug after that.
Yeah.
And right around that time in my life, I was working for a big tech company. And I said to myself, I've always had a passion for building businesses, but I realized I was working at such a big company that, like, even if I blew my number out of the water, it was a rounding error at the end of the day. So I thought, like, what can I do to build a business for myself, build some legacy wealth, continue the W-2 until such a time where, I could, be financially free. Um, and real estate was that business. And it's been such an adventure. I'm co-founder of Deep Blue Capital, co-founder of Take Flight Capital. We have assets in Arlington, Garland, Richardson, Waco. We have a storage facility in Cleburne, and I'm a co-host of the More Doors podcast. So, like, I talk to commercial real estate owners all day at work, and I talk to my team about the conversations they're having with commercial real estate owners. And then when the lights go off in the office, I'm typically heads buried in a spreadsheet, underwriting a deal, looking through financials, or typing up some kind of investor update. Like, to me, commercial real estate is just where it's at.
Yeah, love it. So you've got a couple of different property types, asset classes, like you mentioned, multifamily and self-storage.
That's right.
Okay.
Yep.
Well, I think that's a really good segue. Thank you guys for sharing too. Like I said, I think it's always kind of good to peek behind the curtain a little bit. Um, let's come back to Ownwell. So obviously you're doing property tax protests.
Mhm.
And Matt, you mentioned this earlier, or maybe it was David, I can't remember. One of you said residential and commercial. So obviously commercial is, probably a majority in the focus, most benefit that you can see from that. But what property asset classes or property types are you guys seeing that you can have the most impact on?
Yeah, so yeah, Ownwell definitely services residential. I think we did over 300,000 residential protests last year. And that is attributed to our technology approach again, so we can have that volume and that scale. On the commercial side, that's Matt and I's focus. We can service any of the asset classes that fall under the commercial realm, and really any of the owners. We can help any of the owners that have a commercial property that they need to protest their taxes. So if it's somebody that has an asset in Texas, for example, right now, we know that May 15th deadline is looming, and there's a lot of uncertainty around what's going to happen throughout the rest of the year, and now's the time to act. So
Yeah.
definitely, yeah, we're reaching out to commercial property owners in Texas, and then we have a few other states that we cover that we'll be reaching out to afterwards.
Absolutely. So I'm going to stop there and just pause. So for people who are listening or watching or both, that's a cue, right? We have a very short period of time for this to be really addressed. So this isn't something like, oh, I'll get back to it. Like, no, like even if you need to pause this interview, whatever it might be, you need to make sure you're getting in contact with these guys because this is a big deal. Now's the time, and you can address that moving forward. Um, is there, I mean, obviously the May 15th deadline is coming up. I'm not super, like I said, I've only been active on one deal and then I'm passive on my others. So if you're dealing with property taxes, is this something that you have to be new? Like you have to have just acquired this? Or is this something that, you have somebody that's owned the property for several years and they need to come in and make a new adjustment?
We can accommodate any of the above.
Okay.
So we have a number of folks in our universe that have never protested before, right? And we're talking to folks on a day-to-day basis that have protested every year, and they're looking for kind of a fresh set of eyes on where their assessments are coming in and what they can do to save money on them.
Perfect. So even if you've owned the property for a while, you can make sure to come back and get this
Totally.
taken care of.
Yeah. I mean, especially in Texas, right? You have the ability to appeal every year, and they can never use your appeal to justify a higher assessment, right? So you may as well go give it a shot every year. And companies like ours, where we're success fee based, right? There's no financial risk for you up front. And if we don't do a great job or we end up with a goose egg, which we're typically very proactive at identifying, it costs you nothing.
Love that. I want to come back to that financial risk here in just a minute. So we'll kind of pick on that here in a second. Um, but yeah, so doesn't matter if you have had the property for years. Have you ever come across a scenario where, let's say I own this property and I had company ABC or whatever do my property tax protest and looking at it, or they said they didn't do, they couldn't get a lot, or I'm looking at it and I don't feel 100% confident. Can people come back to you and say, hey, can I get another pair of eyes on this? Can I get a secondhand look? And, have you guys seen or had success in helping people where other companies may have fallen short?
Yeah, absolutely. So you can definitely get a second opinion. I mean, just like an example of you go to the doctor and you get a result, or you get feedback. You want to get a second opinion before you proceed. We absolutely can give a second opinion for someone's portfolio. And just touching on, working with other tax firms that maybe didn't get a great result, or maybe you're not even sure if they got a good result or not. We can spot check that and qualify based on, say, maybe where we believe we would have come in for the previous year. And also, we do have clients that we work with that maybe work with multiple vendors because of our area of expertise in certain markets. So we've come across clients that have national contracts with other firms, but are open to switching a portion of their portfolio over to Ownwell because of the results that we're able to achieve and the expertise that we might have in a particular market.
That's huge. Yeah. So you guys are specialists. You've niched down in these particular areas. So I think that can really, really be a big deal for people who own, like, I know a couple of syndicators that own in all the Sun Belt, right? So you guys are able to take over a part of that portfolio.
Yeah.
Yep.
No, that makes total sense. Love that. So, Matt, let's come back to what you were saying earlier, right? Financial risk. We want as, little risk as possible. and we're taking on as much, we're taking on as much risk as we can handle in most of our real estate deals. So let's talk about mitigating that as much as possible. When you guys are coming in and having conversations with operators, what does that look like? Like what is the process? Let's go with that. What's the process from reaching out and saying, "Hey, David, hey, Matt, I heard you on Erica's Member of the Month podcast, and I want to, look at this." They start that conversation with you from there all the way to, them saving a buttload of money on their taxes. What does it look like in between?
Yeah, great question. So, let's talk about early stage engagement, right? David calls you, Erica, says, we saw your address at 123 Main Street. We think we can save you money. Which like we've done all this analysis before. Like we're calling people that we think we can help.
Mhm.
And so we'll collect the rest of your assets that are in your portfolio, and then we engage one of our property tax consultants, and we give them all your addresses. They do a review of your 2024 initial assessment and then your final assessment, and then they give their own opinion of value. So they're literally calculating, and for every single one of our prospects, where we think we could have come in. And, most of the time we see additional savings. Sometimes we're in line. Sometimes, maybe, the incumbent did a better job than we think we could have done. But we lay all that out up front because transparency is always the best policy,
Yeah.
right? Now, if you decide at that point that you're happy with our outcome, you've spoken to one of our property tax consultants. They've walked you through their thinking, our methodology, which models they think we can use, how much history they have with appealing in your specific county. You sign up with Ownwell. It's an e-link sign. It takes seconds to do. From that point on, we're now representing you. We file we notify the county of your appeal. We collect your financials, and then we start to work the process, right? We're collecting comps, we're putting financial models together, we're getting the latest and greatest data. We're looking at other assessments in your area of like properties, literally on a day-by-day basis to make sure that we're taking advantage of uniform and equal tax treatment. And then we let you know if we're going to settle, mediate, or litigate. And we make a decision at that point collectively, like which do we think is best? And we take it all the way, to the end zone. We approach every opportunity as if we're going to go to litigation and get the best potential outcome. Sometimes we need to, sometimes we don't. But it's always good to kind of have that mindset up front
Yeah.
because it shows that we believe in the cause for our customers.
Yeah, if you're gonna go to bat like that, then you better, right? If you're gonna go litigate, you better know what you're doing and why you're doing it for sure.
Exactly, exactly.
What's that timeline, do you think, between initial phone call to, and I know litigation, you have no idea, right? Like that could
Right.
be, who knows?
Right.
But prior to, going into litigation, what, like you said, you guys decide after you get to work, you decide, all right, are we going to settle, mediate, litigate? What is that timeline to get to that point where you decide what your next steps need to be?
Yeah, so we'll file the appeals by May 15th in Texas, and then tax bills go out November 1st. So that 4.5 or 5.5 months in between those 2 points is where, most of the activity happens.
Okay.
If we end up needing to litigate, I mean, that could be a 9, 12, 15-month process, depending on the various variables.
Mhm.
But for when we're appealing and even in some cases mediating, all that stuff happens between May 15th and October 31st.
Okay, so that needs to be filed. What is the timeline between conversation to, hey, I want to sign a contract. I think this is a good idea. How long does somebody need to make sure that they allot to be able to go through that and make sure that they're ready to sign that contract prior to May 15th?
Yeah, we're if we're doing a portfolio analysis, we probably need 2 or 3 days to put the artifacts together
Okay.
and come back to you with our assessment and review it together. I can tell you for a fact that we have some customers coming in, asking a few questions and signing up on the first phone call. So could be a few minutes depending on the size of your portfolio and the questions that you have.
Yeah.
It could take a week depending on how much research and kind of how much we need to help you understand our point of view.
Okay. That makes sense. Um, oh, there was another question I had. Do you guys have let's kind of come back to that ideal client. I was going to mention it earlier. Obviously, commercial makes the most sense. Asset classes, you guys can pretty much work across the board. Is there an ideal client that has, or a target property size or tax bill or anything in particular that I'm like, hey, if you fall into category A, B, C, that's a red flag. You guys definitely need to call us. Anybody that you can particularly serve.
Um, I'm sorry, you want to take that one, David? Go ahead.
I was just going to say, I think our sweet spot from the commercial space is that 10 to 20 million, 10 to 20 million in AUM value. We go off
Okay.
of basically the assessed value from the county. In that space, those are clients that we understand that we can provide substantial value to, and typically have portfolios that our tax consultants are familiar with comparable properties or have already worked comparable properties in that area.
Okay.
Yeah.
Any target areas that you guys are like, oh, this county or that county, man, we can give them the business.
I know Harris County. We've got
Okay.
great relationships and tax consultants in Harris County, and we've gotten really good results there. I believe Travis County as well.
Yeah, and there's a handful of counties in Texas that we actually don't operate in, Erica, just to kind of think about it from the flip side.
Yeah.
We want to make sure that we're representing our customers as best as possible. There's some counties where, valuations don't change much, and as a result, taxes don't change much, and ultimately, savings are potentially minimal based on what our data tells us. I think David hit it on the head from an asset value perspective, really kind of up to 20 million. We don't like to do high rises and stuff like that. But we have Texas, New York, California, Washington, Georgia, Florida, and Illinois, right? So places with dense population, lots of commercial real estate, right? And in many of those states where, the tax rates are high, so that any variation in those up or down would, result in savings for our customers.
Yeah. Well, that answered my next question is, applicable states. So that's helpful. Um, on the fee base, so you guys are going through a process as far as the game, kind of coming with that financial risk free. You guys are only getting paid based off of the amount of money saved. Is that correct?
Yes, that's right.
Perfect. So the more money that you save, right, that's your incentive. So you guys are incentivized to obviously save people as much money as possible. Now, this question, I'm going to lob it out there, and there may not even be a number for it because I get this question, this form of question on my line of work as well. Is there anything, is there any like ballpark number that you think, hey, on average, we save people X% or X amount that you feel like is a reasonable range? To kind of give an idea of what those savings could potentially look like.
Yeah, I can give you a range. The research we've been doing lately is in terms of how we separate ourselves in the market is compared to other legacy firms in the market in counties that we operate. We are seeing anywhere from 5 to 15% additional savings on these properties. So that's again a nod to our approach that makes us different from legacy firms. So there's a good opportunity that we can uncover additional savings that may have been left on the table in previous years.
Yeah. And that 5 to 15%, I mean, that's huge. And Matt, you kind of mentioned that earlier. When we have these insanely high property taxes, those percentages, dollar wise, I mean, that impacts the NOI on a grand scale across the
Right.
board. So,
And I like what David said there, right? That's 5 to 15% on top of what you're probably getting, either doing it by yourself or working with our competitors, right? So that's not
oh,
that
okay.
could not that the total savings may be greater. And that, to your point, Erica, is because we're incentivized to save our customers as much as possible.
Yeah, that's coming back to your structure. So, well, I'm glad you mentioned that, Matt. I didn't even catch that. So you guys are whatever you've been saving with other companies or even doing it on your own, take that number and then increase that by another 5 to 15%. So that's just savings on savings. Yeah.
Exactly.
Love that. That's huge. Thanks for clarifying, by the way. So let's kind of pivot a little bit. So obviously, Matt, you mentioned earlier the last couple of years have been interesting for a lot of people for a lot of reasons. What do you guys think are some of the biggest challenges that, you're facing either in your business or in your investments just over the last 5 years? Challenges that you've seen, but things that you've learned from those problems and from those challenges.
So I got a laundry list. David, you want to go first?
Um, yeah, I mean, from a brokerage perspective and from an investment perspective, definitely challenges. You've got property owners that are in a position that maybe they bought at the peak of the market and they're facing, you know, bridge loans coming due or facing extensions on, and that gap from the buy to ask price between buyers and sellers is still there. It's a sticking point. So you've got challenges with rising expenses, which is what we're trying to help property owners deal with directly. Insurance costs, utility costs. You've got dealing with tenants and affordability of rent just in general.
Mhm.
And at the same time that property owners need to be able to execute on some rent growth for their property so that they can pay the bills. So you've got
Yeah,
this
things are
storm
getting
of
cheaper.
yeah, you've got this storm of challenges that commercial property owners are facing in the market, and it's been a challenge to get deals to pencil from a buying or selling perspective, however you want to hash it.
Yeah.
Yeah.
Do
Yeah,
you feel
just
like that's played into y'all's business like the last couple of years? I mean, with people, asset management, I think has become a much bigger area. So I think people are realizing it's not just, oh yeah, you buy a property and make, bukus of money. We actually have to operate this thing. Do you feel like these challenges have kind of shone a light on the value that you guys bring?
I think they're going to this year for really the first time, right? If you think
Oh,
about
okay.
right now, like the counties are probably backing up dump trucks full of tax assessment bills to the mailbox as we speak for 2020, for this year's taxes.
Yeah.
24. So I think the market really changed in early 2023, right? Interest rates spiked, cap rates started to decompress, a lot of this new supply started to come into the market, right? So I think 2024 was really the first full year from a T12 perspective, right? Where all this stuff hit the fan at the same time. And so as we look at our 2025 tax season, 2024 is really going to be the first year where we can look back at financial performance to say, there could be a gap between what assessments show and what my NOI divided by my cap rate, right, really shows my property as being worth.
Yeah.
I like what David said as far as, deals that were purchased at the height of the market, right? Some of those deals, especially, workforce housing, B minus type deals, some of those deals have adjusted very quietly 25, 20, 25, 30% off those peak prices. And the assessments probably don't capture that because those decisions aren't being made based on the actual financials of the deal. So I
Yeah.
think this year is really where those T12s and those financials are going to start to surface a lot more than they were in the past and give operators the opportunity to really negotiate their taxes down.
I hadn't really thought about that, but that makes a big difference because, like you said, the properties are typically bought. Commercial properties and residential properties are bought very, very different, right? We've got like a market price based off of a lot of emotion. You mentioned that earlier, David. Commercial, we're looking at it through cap rate and financials, and we're buying it as a business and as cash flow and what's the NOI potential there. So, like you said, I think I hadn't thought about that, but now we're starting to see those two things really start to demonstrate a difference between what the financials demonstrate and what the county might feel about your property.
Yeah.
That's huge.
And look, I think it's really going to come to a cusp in the next couple of weeks.
Wow.
And I think too, the one of the to me from a just existential perspective, right? Owners, commercial property owners, syndicators, GPs, deal sponsors, right? There's always been this, you know, everybody wants to be very transparent with their investors, but you definitely go into a deal very positive about your return profile, your outcomes, etc. And you definitely want to move down that road and operate your property, making changes on a day-to-day basis to impact your outcome. But once in a while, you got to take a breath and say, okay, what do the numbers tell me about the performance of my property? And how can I leverage those numbers? Maybe not to put, lipstick on the pig and give everybody rose-colored glasses, but if that financial performance can help me save money in certain areas that impacts the return profile or gives my investors a little bit of breathing room, I should absolutely be doing that.
Yeah, absolutely. Because again, like that's the perfect example for it. You're looking at it from the numbers, which is what these properties truly are based on, right? The value of these properties in our industry is based off of those financials. The county views that differently. So you're just trying to, bring those two perspectives in a little bit more alignment, right? Which
Right.
I think comes right back to the very first thing that we talked about, which you guys having the experience and the background and the knowledge in this space with the numbers, doing the underwriting, being investors, right? For
Yeah,
investors, by investors. I think that really kind of plays into how you guys are able to provide so much value for your clients. That's huge.
agree.
Really
Agree.
good example. Thank you. That this isn't an area, like I said, that I'm super familiar with. So I'm learning on this as well. I mean,
No, you're good. And it's funny, Erica, because I feel like the paradigm has shifted very significantly in 2 years, right?
mm,
So I feel like in 2023, we closed on two deals inside of 30 days in the first quarter of 2023, right? And just as we were, done patting each other on the back and getting started on our business plan is when the tax assessments came out.
mm,
And I feel like municipalities and counties woke up when the assessments came out in April of 2023 after 3 years of a very hot market and all that, near zero interest rate stuff driving up prices. And all of a sudden, assessments went through the roof. One of my good friends and partners, his assessment on an asset in Denton, he would have had to increase rents $300 or $400 a month on this entire brand new asset to just offset his tax bill, right? So assessments, I feel like everybody woke up kind of out of the pandemic and COVID and stuff like that, and values went through the roof. Now here we are 2 years later, and so much has changed. I wonder of that how much of that is going to readjust, and time will tell here over the next couple of weeks and months.
man, that's a big deal. I'd like to, I'm a data person, so I'd like to kind of see like any charts or anything to kind of like, retrospect, which kind of sucks, right? Like I wish I had a crystal ball that I could see what's going to happen, but I'll take retrospect. Hindsight's second best. I'll take
There
that.
you go. Love it.
No, that's really cool. And again, I think that brings up a lot of good points. So, you know, like you guys said, anybody that has a property that they've had for a while or new, doesn't matter. Like that's going to have an impact based off of the new tax appraisals coming down. So these conversations need to be had, especially like you said with this year. There's going to start to be some gaps, especially if you bought your property, like David said, during those peak buying seasons. So if your
And there
red
are a
flags aren't
couple
going off and you're not sending alarm bells, I don't know what to tell you. Like,
there are
here
a
it
couple
is.
other profiles of clients that we can help as well. So there are, those strong operators, seasoned operators that are buying in today's market, which, I'm impressed by and, I'd love to learn from. We're able to also help with forecasting services, and that's not something that we charge for.
Mm.
So for acquisitions specialists or operators that are looking at deals, we can help them forecast tax projections for their underwriting, maybe pencil a stronger offer for a deal if it makes sense. And then on the flip side of that, people who are looking to exit deals, taxes are prorated based on the number of months of ownership throughout the year. So it doesn't hurt for somebody to protest now, even if they believe or know that they're going to be exiting that deal towards the end of the year.
Well, let's kind of come back to that because those are awesome. If you're exiting a deal, if I'm planning to exit a deal by the end of the year and I haven't protested taxes or I have, and maybe I did it myself, I hired a different company. What you're saying is somebody looking to exit can hire you guys to preemptively protest taxes so that the new buyer like that's already kind of set up for them, or like what does that look like? Because to me that sounds like, hey, we're going to preemptively protest these taxes so that can help them on their sale price.
Yes, exactly.
Great.
I
Yeah,
think
That's
so
awesome. I was like, is that's what it sounds like, but it sounds really too good to be true. So that's
yeah.
great. So if you're looking to sell or even if you're looking to buy, you don't have the property yet, then, you guys are able to have those conversations and, do those forecasting models and all that.
Yeah.
Yeah.
And look, I think David's point about tax forecasting is spot on. So I got to look at a deal, I don't know, 6 weeks after starting at Ownwell. And one of my tax consultants was able to prove the pro forma wrong because the pro forma included an expected taxes for 2025. And we were able to figure out that, because of circuit breaker, there was a circuit breaker trigger inside the deal. And because the deal was under $5 million and the taxes were less than the purchase price was less than 25%, like taxes would get capped. Like we're getting into the bowels of these transactions and really trying to figure out how to minimize any sort of and give you an accurate tax forecast. And look, when you're buying a deal, when you're evaluating a deal, right, there's, those little differences up front, annuitized over your hold period could make a material impact on your return profile. So, turning over every rock along the way is super helpful.
That's Yeah, that's, I think, probably the biggest thing. Like you said, if you're able to prove the pro forma wrong, so that's part of almost that forecasting slash due diligence period. Am I understanding that correctly?
Yeah. Send us a deal. Send us a deal that you're thinking about buying. We'll give you a tax forecast looking out for, 2 or 3 years based on what we see in about your deal, our understanding of the counties, and look for any ways to cap your exposure to taxes because of various infrastructure, and at the very least, be able to give you an accurate 2 or 3 year, forecast.
And to me, I'm just thinking through, one of the deals that I was on. I think, David, you and I have talked about this one. I think one of the biggest hurdles that we had on this deal, and other people have run across as well, is not accurately forecasting what expenses are going to be. Most people, like, their initial thing that they think about is going to be insurance and or construction, right? Like if you're doing a heavy lift. So what do people do? What do people do in their acquisition process or due diligence process? They bring in their contractor to get an accurate measure of what are these repairs, renovations going to cost. If you're bringing in a contractor on the due diligence period to make sure that you have accurate projections, why not bring in your property tax quote unquote contractor to make sure that you're doing that accurately on the due diligence
Yeah.
process? I mean, that
That's
just makes too much sense. You're doing all that on the other end, on other pieces of the area, so you might as well do it on the tax side as well. That's huge. So,
yeah.
okay, we talked about the struggles, we talked about, right, all the, doom and gloom that we've been facing over the last couple of years. What are you guys excited about, either in your own investments or the business? Like, what's something that you're really looking forward to, that's kind of, the bright light at the end of the tunnel?
Yeah, I think well, one thing that I'm excited about is the market projections coming into the second half of this year and 2026. And we're in Texas, obviously. It's one of the strongest markets in the US, and in Dallas specifically. The yes, we're going through struggles with supply absorption and flat rent growth for the last couple of years or so, but we haven't slowed down as far as growth within the Metroplex. That supply is going to be absorbed within the next 12 to 18 months, or maybe not all of it, most of it, but we're going to see on the other side of this rent growth pick up again, maybe at the same time as a little bit lower interest rates. So I think that I'm excited about that opportunity that's on the horizon. And yeah, I people have been saying kicking the can, survive to 25, et cetera. We don't know when that's going to come, but personally, I'm excited about being in a position to be a buyer and now or soon, so that we can take advantage of those times when they do arrive.
I think
Yeah, pretty much the same, right? I'm definitely looking to We, I should say, are definitely looking to make another acquisition before the end of 2025. We're already seeing deals down in here in Texas being publicly marketed at just to cover the debt, right? And that to me says that they're 20 to 25% lower than where they traded a couple of years ago. So we're on the lookout for those. We're seeing a lot more stability come into our existing portfolio just in the
Mhm.
last couple of months. Knock on wood, that continues. Our occupancy rates are up, delinquencies down, and hopefully we can get some more stabilization and into the portfolio. And then from an Ownwell perspective, David will tell you, I mean, we've been working tirelessly over the course of, the company's 5 years old, but since we really, made a dedicated motion on this, commercial real estate front, we've been working tirelessly, and everything that we've been doing is about to hit the fan here in the next couple of days. So we're looking to serve as many customers as possible, and really rally it through May 15th to get as many people in Texas signed up. And then the real work begins, right? It's just like closing. You don't celebrate when you close the deal, you celebrate when you achieve the plan. So then we all got to go to work and make sure that we're able to be successful with those appeals. And once we sign up as many customers as possible, that's what gets me out of bed every day.
Yeah. Like I think that's the best analogy, right? Like if you go to buy a property, you go through due diligence, you go through all the work of closing the deal, that's when the real work starts. So you guys are not getting to take the summer off, it sounds like.
No, definitely not. But it's okay because we love what we do.
I love that. Yeah. So while you guys are working and slaving away, everybody else is going to be relaxed, and you guys are going to be putting in, doing the Lord's work, doing all the good things for us. Oh, I love it. Well, that's super exciting. I think, like you said, I'm interested to see what happens over the next couple of years too. And David, I know even at some of the conferences, people like talk about survive till 25. That just sounded cool because it rhymed. I think most people are projecting like 27 to 28 to see like really like that next uptick. Who knows, right? Like obviously everybody's crystal ball is broken. So we'll just have to wait and see what happens. But um do you guys think, let me ask this. I was thinking about it earlier, David, when you were mentioning about our, population growth has not slowed down. People are still moving here. The economy is super strong. As we, in Texas specifically, as we continue to see this upwards trajectory of people coming here, the economy continue to expand. Do you foresee, either of you guys, do you foresee that having an impact on future appraisal values? Is that something that could promote like appraisal values of properties, tax values going up higher just because we continue to have this stimulated growth?
Yeah. Look, I think a lot on that is to be determined, right? But if we
Mhm.
go back to the fundamental principle that commercial real estate is valued based on the income it generates, right? Even if the market rebounds, but your property is performing poorly, you still have the ability to appeal, right? And make your case based on one of the acceptable models. From a macro perspective, I definitely don't think we're out of the woods economically. I think Goldman Sachs came out yesterday or today and raised their chances of a recession up to 35%. Uh, I think mortgage delinquencies are the highest they've been in 20 or 25 years. I saw a chart on that just in the last couple of days. So I think consumer sentiment's fading a little bit. You're starting to see folks become a little bit less willing to spend, and credit card delinquencies are very high, and 401k cash outs are at a high. So I think we're in a very interesting point from an economics perspective. But once this supply comes through on the multifamily side and we get a little bit more stability, and some of these RTO programs, put people back in office buildings, and we can see a little bit of a rebound there.
Yeah.
I think, late 25 into 26, and to your point, Erica, into 27, there's a great opportunity in commercial real estate. The question you got to ask yourself is, can you last that long? And do you have the dry powder and have the ability to seize opportunities?
Mhm.
Yeah. Be ready to go. Luck is the intersection of opportunity and preparation, right? All these
Exactly.
lucky people that
Absolutely.
struck gold, man, they were just sitting ready to go and they saw the writing on the wall. So, yeah, I love it.
Yeah, there's a reason Warren Buffett or Berkshire Hathaway has $334 billion in cash right now. He's waiting to take advantage of something that we none of us probably see yet.
So, we talked a little bit, let's kind of come back to a little bit of personal. Well, let me finish one more thing with Ownwell. Is there anybody that you guys are who or what are you looking for in the marketplace that you feel like, hey, this is somebody or something that we could really add value to, or we are needing that value added? Anybody in the space that you're like on the investment or on the business side, like, hey, we're looking for this type of person or this type of you know, place, situation, anything you're looking for that you're like, hey, we need something fulfilled here.
Yeah, from a customer perspective, I think it's a lot of, some of the points we touched on earlier just around anybody with property, whether or not they've protested before or if they're working with someone or not already. interested in a second opinion. We do talk to a lot of clients that say that they're satisfied with an agent or incumbent that they've been working with for a long time, but then we pull that back a little bit and ask some additional questions and find out that maybe they're not sure that they've been getting good results over the years. So it's really any commercial property owners that are interested in or have a need to maximize their tax savings is who we're looking for right now.
Yeah.
Yeah. Me as kind of the leader of the group, Erica, I want to talk to everybody. I really do. And we approach every day like we want to. Like if you did it yourself last year, let us show you what we think we can do. If you did it yourself last year, is that really the highest and best use of your time? My neighbor down the block, our daughters are like best friends. He's been running product design at one of the big tech companies now for 20 years. And he takes a half a day off of work and he asks my fiance for comps. And then he goes down to the court and pleads his case. I'm like, buddy, is that really the highest and best use of your time? Right? We do this for a living and we have all that stuff on, at the tip of at our fingertips. So, you know, there's plenty of folks out there that have been associated with companies that didn't get great results. There are plenty of people out there that have been, have decade-long relationships with legacy companies that have done a very, very good job. But in this part of the market cycle, do you owe it to yourself and your investors and your kids in the event that you're a family office or a trust or something to go see if there's a new perspective and a second set of eyes on things, and whether we have the opportunity to just present and teach you a couple things and clue you in on how we think about things, or you choose to sign up, that's up to you. But I think we're out there to educate people that there's a new way and a new thought process on this and a new approach.
Absolutely. Especially like if you're a GP and you're trying to manage the asset, you're doing this, like, and then you're trying to include property tax protester on top of like quit half-assing two things, whole-ass one thing, right?
Right.
And let the other people that are specialists in this area, do the whole thing. A little bit of Ron Swanson there for you.
Like you said, leverage your team of
Leverage your
experts.
team, leverage your network. Absolutely. That's what, who, not how. So yeah, I love it. So speaking of who, not how, um, we'll wrap it up with the personal aspects. For you guys, are there any particular books, podcasts, anything that you've read or listened to that you really feel like impacted your personal beliefs, behaviors, or habits and were instrumental in just continuing to develop personally and professionally?
Yeah, I know both of us are, heavy in podcasts and readers. Matt mentioned he's a host of his own podcast as well. Um, I recently finished one of David Goggins' books, Can't Hurt Me. I
Oh yeah.
love that. I love that perspective and that mindset. Um, his approach to life and in relentlessness was great. It's actually another book, Relentless, is one that I would definitely recommend that I really enjoy. Um, Podcasts, yeah, I love to learn, so I'm always looking for podcasts with, content that I can apply to work, to investing, to the family, things like that. So nothing specific comes to mind. Maybe the Rate Guy podcast, that's a really good one.
The
It's
rate guy.
the Rate Guy podcast, JP Conklin, that's specific to our industry. I'll always look forward to that one on Mondays.
Cool.
For me, I think I've had a couple of very influential podcasts, right? Bigger Pockets for sure, the Jake and Gino show, Lewis Howes, The School of Greatness, and the Tim Ferriss show. I can like remember specific episodes and certain quotes from many of those episodes, and I think those were super influential. But with regards to books, there's three that really have spoken to me for a very long time. The first one is 11 Rings by Phil Jackson. Take a guy who won 11 NBA championships, six with the Bulls, five with the Lakers, managed some of the biggest egos in the game, and kind of made it look really, really easy. Fantastic book. Wouldn't jump at you as a leadership book, but most certainly is.
Hmm.
Second one is Winner's Dream by Bill McDermott, former co-CEO of SAP, now CEO of ServiceNow. You know, Bill started off selling copiers in Midtown Manhattan and ended up being the leader of some of the biggest enterprise technology companies ever. And I think ServiceNow is like one of the fastest growing SaaS companies in the history of ever. Super fascinating guy and great story. And the last one is Behind the Cloud by Mark Benioff. So if you're looking to start a business or learn from someone who started one of the biggest cloud companies, Behind the Cloud is literally like a 110 step playbook on how Mark built Salesforce.com.
Oh, wow.
And like I just finished reading it, and tomorrow I'm going to start it all over again. So, uh,
Wow.
amazing books.
I've never heard of any of those, and I am like a crazy book person. So that's awesome. And then David on the Can't Hurt Me, I think it was Can't Hurt Me, or I've read the Can't Hurt Me and Relentless. I did the audiobook and I did it with the interview commentary. So like they
Yeah,
would read a chapter and then come back and man, David Goggins is a crazy, like, I don't want to say he's crazy, intense, relentless, right?
very
Like,
intense. Yeah.
oh, if you're gonna read that book, you've got to do it with the commentary because just to get the behind the scenes stuff is huge. But no, thank you guys for sharing. That's excellent. So, we'll start to wrap up. I know we're coming up at the top of the hour here. So, thank you guys so much for coming on and sharing some insight. First thing, what is the best way for people to get in contact with you?
Yeah, you can find me on LinkedIn, just David Turner at Ownwell, and or email is david.turner@ownwell.com.
Perfect. And I will put links to his LinkedIn and the email in there. We'll have it across the screen. And I think we have a gift for you guys.
Yes.
Special
You
present.
can get a hold of me at matt@ownwell.com. Super easy. You can find me on LinkedIn too. I'm probably liking one of David's posts 5 seconds after he posts it. I'm super active there. For any of the listeners of this show, send David or I either an email or a DM if you're interested in having Ownwell represent you for your 2025 tax appeal. I'll take 5% off your bill as long as you mention that you heard about us on this show.
Heard it here first. Awesome. Thank you guys so much for that. That's so powerful. I'm excited because again, being a passive investor, I know the impact. I'll tell you right now, I had a syndication I was in. It was a portfolio I'm still invested in. It was one of the only ones that was continuing to distribute. And all through, kind of all the mess and everything, I was like, hey, they're doing great. And January of, I think it was January of last year, they stopped our distributions. The one LP investment I had made, or two, but this one multifamily specifically, LP investment that I made was one of the only ones distributing during this kind of rough time and they stopped distributions and they specifically referenced taxes and insurance going up. And so they had to stop. So you guys are really making a huge difference, not just for the property, the GPs and the LPs, just all of them across the board. So we're going to push this out. Get this done by May 5th, May 15th. You've got to get it done. Get in there, get it done now. So make sure you guys reach out, let them know you heard it here, and you'll get your 5% discount and save a whole bunch of money and send out a whole bunch of distributions and then go buy more property. So thank you guys so much for coming on. Any final words, anything that we didn't get to chat about?
I just want to say thank you for having us. I really appreciate the invite.
Absolutely. Anytime.
This was great, Erica. Thanks so much.
Thanks, guys.